What is going on, you guys? I am super excited to bring to you finally my FEMEX series called Trading Trench. This is going to be an in-depth series where each month I'm going to have a guest on and we're going to share with you their trading regimen, what they do in the morning when they log into their computer, what they look for, how they set up their charts, how they set up their strategies, and we're going to really dive into what makes them a good, successful trader. Really excited for you guys to be able to check this out. First off, this month, we're just going to start with me. I'm going to lead off. I'm going to show you guys what I do when I set up my computer, what I look for, how I set up my charts, what kind of trades I look for, my watch list, the list goes on. So I really hope you guys are excited for this series because I am, and let's just get into it. Welcome everyone to the first episode of Trading Trench. Today you're going to get to know me better, a little bit more how I trade, and next time we will have a special guest on with me. A little bit more background about me. I was a nurse for 5 or 6 years. I did a lot of pediatric work and dialysis. I actually was the manager of a dialysis clinic, and we oversaw the hospital as well. So I did that. I also coached soccer for about 10 years. So I have a lot of, hobbies and interests, and I've gotten a lot of different experiences. And now I have quit my job about a year ago to go full-time into crypto trading. And I also started a company about 3 years ago called Elevate Trading, which you're seeing here. And it's basically a huge educational group to help people learn to manage their risk, take emotions out of trading, etc., etc. Of course, I also share my trading ideas there and share how I manage trades, how I set trades up, what I'm looking for, how I build a watch list, etc. And that's a lot of what I'm going to show you here today. I started out in crypto a little over 3 years ago. I got in before the 2017 bull market, thought I was a genius trader and that trading was easy, making money was easy. You just throw a little bit of money here and there and it would 10x in a week. It was absolutely insane. I thought I was a guru, and I quickly realized that the markets don't always go up. So market crash, luckily I got in it early enough to not, lose money, cashed out what profits I had remaining and figured, all right, well, the market's going down right now. This is a very good time for me to learn how the market works. So that way, when the markets go back up, I'm ready for it and I can capitalize on it. So I learned how to preserve my money in 2018 and learned how to accumulate and trade. And that's what I've been doing ever since. I would say that my number one tip for anybody new to trading is to not just jump right in. I think you should really study it first and foremost and watch my Beginners to Trading series on YouTube or watch some of my trading videos. Make sure that you understand risk management because risk management over the long run is going to be your best friend. There will be times where you will get stopped out and you think you shouldn't have used a stop loss. But the time you don't use a stop loss will be when China bans crypto and the market dumps or the COVID dip or whatever. So I always recommend using a stop loss and learning risk management, even though at first a stop loss might hurt you a little bit. You might get stopped out a lot. Once you get better and more experienced and start learning where to put your stop losses, in the end, risk management will prevail and you will be much improved and you'll sustain your accounts longer term by having good risk management. I'd say one of my best moments as a trader was probably my Uniswap trade back in January. The market was really pumping all these new assets that hadn't gone into price discovery yet. There was a picture perfect reaccumulation on Uniswap and it hadn't quite broken its all-time high yet from a closing basis. So I was accumulating around 350 and as soon as it broke that close on all-time high, it mega pumped. It did about a 10x from there. And of course, I sold a little bit early, but that was definitely one of my best trades. It was awesome to have studied the market and just absolutely nail something when you just know it's going to happen and you have a high conviction rate and you just absolutely nail a trade. There's probably nothing better than that. One of my worst moments as a trader, there's so many, there's always going to be bad moments, but there's just one that sticks out in my mind for some reason when I think about that. And it was a trade I had on Bitcoin with leverage. And of course, one of my worst moments would be with leverage, right? But no, it wasn't terrible. But I remember entering a trade, and literally in 30 seconds, I was up $15,000. It was a long price had just popped like, I don't know, $500 in seconds. And I was up $15,000 in literally 30 seconds. And I didn't know what to do. I wasn't expecting that. And I kind of froze and got greedy and was like, no, this will go higher. We're going to go way higher. $15,000, that's nothing. All right, let's go. And about 2 minutes later, I was taking a $3,000 loss by getting stopped out. So I did have a stop loss on that position. I had put in a stop loss right after I entered the trade, but greed got to me. I think we can all agree that making $15,000 in about 30 seconds is a great payout, and I should have just taken the profit. So I'm slowly learning, not to be greedy, keep taking profits, and depending on market conditions, current market conditions, super choppy. So when market conditions change and not everything's just pumping straight up only, sometimes it's better just to take more profits. Certain markets are better for profit taking, like the current market conditions. And the market we saw back in November time was not as good for profit taking so quickly. So make sure you adapt to market conditions and know exactly what they are, so that way you aren't just trying to hold coins right now that are pumping up 50% plus and then selling right back off to where the entry was at. All right, you guys, so here's how I start my morning. I usually get up around 6 a.m., 6:30 in the morning, and get up with the kiddo, get him ready, get him fed, feed myself. I try not to look at charts too much in the morning when I'm not at my computer. I've noticed that if I do look at charts in the morning, I'm just kind of glancing at them. And then when I get to my computer, my emotions are taking over based on what I was seeing on the charts, which weren't really a full analysis. And it was just kind of a glance over. So I do check the charts in the morning to kind of see where my current positions stand if I'm in any positions, but I really try not to look at them too much until I actually get to my computer and I can do a proper analysis. So my trading setup, you guys, I have just one monitor. I used to have two, but now I just have a 49-inch monitor that I use. I don't like to have too many monitors or too many things to look at because I have way too much ADD. And if I have that much going on, I get distracted way too easily. So I really like one monitor and one focal point, and then in the middle of this monitor is where my main trading screen and charts are at. And then on the outsides is where I have, like my secondary exchanges or my secondary analytic tools. Of course, you guys, when I get to my computer, the first thing I log into is TradingView. That's a no-brainer. And I usually just pull up I usually just pull up the Bitcoin chart right away. Bam, so now I have the Bitcoin chart. Then I'll pull up Twitter. So I control all of you on Twitter. I'll pull up my Discord, Elevate Trading, so I can start sharing my thoughts with the homies in Discord. And then, of course, I'll pull up Telegram and see if I have any new messages. But that's pretty much all I use is Twitter, TradingView, and Discord. I think that's really it. So I'll pull up Bitcoin here, and I usually like to zoom out to start the day. So I zoom out, look at the daily time frame. If it's a Monday, I'll usually look at the weekly time frame as well. Or if we're close to a monthly close, I will take a look at that. Right away, I don't usually log into any trading accounts. I will wait until I've had a good look at the market. Then I can actually get a full assessment of how the market looks, and I'm not just reacting to something and FOMOing into a random trade right when I pull it up. So after I've taken a look at everything, I'm kind of settled, I know where things stand, then I will actually pull up my trading accounts and figure out what type of trading I want to do that day. All right, so this is how my screen looks, and this is my watch list over here. You can see I keep a list of stocks that I'm keeping an eye on. The colors don't really mean much to me. I just like having colors on some of them that I want to keep an eye on or that I have positions in. And then obviously I have a very long watch list here that I probably need to clean up now that I'm thinking about it. But I'll check on all my positions in the morning, depending on the position. If it's like a weekly trade, I'm not going to check on it every day because, again, I have stop losses in place. I have risk management in place. So I really don't need to check my swing trades every day. If I'm not in any positions, I'm going to be looking through my watch list to see if anything is meeting my criteria for entry. If there's no criteria met, then I maybe am going to set alerts, or I'm just going to keep an eye on something that is getting close to my area of interest. So depending on how many trades I'm in, I may look for another trade on my watch list. If I'm already in enough trades or my account risk is maxed out, then I'm just going to keep my watch list kind of to the side. I'm going to keep managing positions. If I maybe have one position go into profit and I'm able to de-risk that via a stop loss or by taking some profit, then I may start to look for more trades as well. Now that I've kind of de-risked one trade, that I could go to the next, especially if my portfolio risk is already maxed out. And what I mean by that is if my risk for different accounts is different. So let's just say if my risk was 5% on an account and I entered 3 positions, all right, at total of 5% risk, and I had one position that was a 2% stop loss on my account, and that position went into a lot of profit, and I was able to move my stop loss to break even. Well, now I have an extra 2% on my account that I can risk in another trade. So then at that point, I would maybe go over to my watch list and look for a new position or a new entry point somewhere. So depending on where the daily time frame is at, if it's at a support or a resistance, I could consider looking for, a swing trade. Now, at this current level, Bitcoin isn't really somewhere where I would want a swing trade at, but I can see here that we have this nice rejection right here on a retest. So I would potentially be looking at price going a little bit lower. Now, we are at a support level as well. So it's really not ideal for me to get into a swing short position, okay, because I do have this support area down here. So if I'm swing shorting into a support, I can get a lot of turbulence here, a lot of rebound. So for me, a swing would be a no-go at the current level. So because of that, I would probably go down to lower time frames, all right, and I would look for maybe a low time frame trade. I would look for some volatility if I'm wanting to scalp, all right. And I can see here that I'm a little late on a long. We had a really nice breakout here above the EMAs. All right, nice volume coming in. And so that would have been a great long opportunity for me if I was here paying attention. All right, again, we had a nice breakout here of this downtrend, maybe almost an inverse head and shoulders type deal. So this would have been a really good opportunity for me to catch a quick breakout long. Now, depending on what time frame I'm trading is going to depend on how long I would hold a trade. So if I go down to a 15-minute chart or a 5-minute chart to trade this breakout, and you can actually see on the 5-minute chart especially, we have a very clean ascending triangle breakout. Now, if I entered this trade on a 5-minute chart, you can see OBV showing nice strength as well. So if I entered this trade on a 5-minute chart, I would not be holding very long, all right? If I enter something on 5-minute charts, probably like, I'm gonna hold it for 5 to 10 minutes probably, maybe 15 minutes tops, all right? So know what time frame you're trading. If you're entering a position on a 1 or a 3-minute, 5-minute, 15-minute chart, you're unlikely to be holding that for days. Let me show you guys how I even set up my chart, all right? Because I didn't do that earlier. So this is what I like to have set up. I have Gooner EMAs here. All right, this is the 11 and 22 EMA. It is a free script, a public script. You can add it if you would like, and you're free to use it. This is the 99 SMA, right? And I do have like a very simple strategy that I will use with all 3 of these combined. I'll use it a lot on like the 15-minute chart. But anyway, then I have Top Goon X, which you all know, or most of you know, is the custom indicator that Satoshi Heavy and myself created, which gives, buy approaching signals, sell approaching signals, etc. And a lot of times I'll trade off those signals as well. So you can see here, the most recent signal it gave was a buy approaching signal, and we have yet to see any sell approaching signals yet. Again, on the 3-minute chart, I have a buy approaching signal, which means that I would look to buy the dip. And you can see here we dipped, so I would look for a dip buy opportunity and bullish momentum from TopGoonX indicator, and that's how I can very easily look for some trades, especially on low time frames. All right, again, another buy approaching signal. So when I start to see a lot of buy approaching signals on a lot of time frames, I'm going to be more looking for longs. And if I start to see sell approaching signals on a lot of time frames, then I'm going to more be looking for shorts. So it's one very easy way for me to kind of take a quick glance at where price is at, because TopGoonX shows momentum. So it's showing that momentum is bottomed out here, and when momentum's at the top, it's going to show that momentum is topped out. And then you're going to have, bearish divergence markers and bullish divergence markers as well. But again, all of that's really in depth to get into on this type of video. Now, for me, you guys, I don't mind swing trading. I'm not as good at it, so I mostly do it with altcoins and spot. But if I am going to swing trade, I need it to be at a key level, right? So if price is not at a key level, I'm literally just going to go down to different time frames until I find that price at that key level, and then I can look for a trade on that time frame. Again, I'm not taking any positions right now or making any actual claims, but if I depicted this as a 4-hour resistance, I could easily set a position up here, find a relatively good stop loss at above a major resistance level, and set an R to R. Now, I do recommend always using this risk to reward tool. It helps take away emotions. It makes sure you're building a strategy and you're using a plan, all right, to ensure that you are calculating your risk. Because if you're not calculating your risk before every entry, then you don't really have a plan or a strategy, and you're not able to cut losses small before they become bigger losses. So I always would very highly recommend using this tool, whether you're shorting or longing, to calculate your risk and your reward on a position, because you really do want an ideal risk to reward. And on low time frames, I usually do like at least a 1 to 4 or a 1 to 5 minimum risk to reward, because that ensures that even if I'm wrong 2 or 3 times, I can be wrong the 4th time and still end up in profit overall on those trades. Now, if I am scalping on 1-minute time frames, I'm obviously going to use a little bit different strategy. And not only that, I actually like to use v3.agger.trade. All right, so this is a little cool alpha tip for you guys. This has audio feedback as well. So I can move this to the side of my screen and have it be minimal. And that's what I'm going to do here. But you can see all the buys and sells coming in, and you should be able to hear them as well. And if you can't, if you log into the site, you will be able to hear them. And you will also see liquidations show up down here. So I move this off to the side of my screen eventually here. And that way I can still see it, but I still have access to my main chart here to keep an eye on what the actual candles are doing. All right, so if I was shorting this, I would want to hear some, big sells come in right about here. And if the sells came in, I could short this down to the next support level. Okay. Again, I'm not trading right now, obviously, but low time frames, I look for more momentum plays. High time frames, I look for more structure plays, accumulation, reaccumulation, breakouts, and things like that. And all my low time frame trades are going to be really tight risk to reward. So I'm not going to have very wide stop losses. But here you're going to hear that a large sell just came in. It was a $2.2 million sell to break my resistance. So realistically, we should see continuation down here, and that would make for a really good quick scalp for me. And again, on low time frames, I don't always have time to do a tool like this. But again, if my risk to reward is something like this, that's a little over 2 to 1, or maybe I even put my stop loss a little bit tighter. Okay, and I would be looking for, at minimum, this support to be retested, if not lower. And on 1 minute time frames, again, if I enter a 1 minute trade, I'm not going to be holding it for very long, right? I'm going to get out of it within a couple minutes. So if for some reason price just does this for 5 or 10 minutes, I'm going to get out of this trade. I cannot hold a 1 minute trade for very long. But again, you hear that high volume breakdown. We haven't heard much buying come in, but now we hear some buying come in. Okay, there we go. So price remained sideways for a long time. Shorters didn't hold the momentum. Okay, and at that point, I would probably have gotten out of my trade, right? Because there was a lot of buying volume come back in. So this is a really good audio representation for me to really feel the momentum, to hear where buyers and sellers are coming in. And worst case scenario on a trade, nothing wrong with getting out of break even, right? And just taking a little hit on fees. When I'm scalping, it's all about momentum. And this is too sideways and choppy right now for me to have really any momentum, okay? I want to see if I enter a short here, I want to see price continue to go straight down. If it doesn't, usually that's a good sign for me to get out. Again, just like if I took that long earlier, okay, and I'm going to close this out so we don't have beeping in our ears anymore. But again, for scalping, that can be really useful because we had this high volume breakdown and then we had a lot of high volume buying come back in. Now, for me personally, I still wait for candle closes. So I would technically want to see a candle close above this line for me to actually get out of this trade. But again, momentum has stalled. A lot of times it's best just to get out. But if you see here, this is where that 15-minute chart broke out. So if I'm getting in on this breakout, I'm going to want to see price go immediately up. If it stalled for too long and went sideways for too long, I would have to get out of that because it's likely going to break down. If you're buying a breakout or shorting a breakdown, you expect price to go immediately in that direction because it is a breakdown or a breakout, right? If it's not a breakdown or a breakout, then it's not going to go in that direction. It's going to go the other way, so you need to get out. It kind of sounds redundant, but if you just think of it like, okay, this is a breakdown, price should drop. Price doesn't drop. I need to get out of a short. This is a breakout, it should break up. Price doesn't break out, price doesn't go up. What do I need to do? I need to get out of my long. Okay, so that's kind of how I look at these low time frames. And on 1 minute charts, you shouldn't be holding a position very long. You shouldn't be getting in that, like you should have a tight stop loss. You know, I'm not going to use wide stop losses on these low time frames, and I'm not going to fight them over and over and over. Okay, so if I'm on a 1 minute chart and I'm trading and this isn't working and that short didn't work out, I'm not just going to short again. Because what's going to happen there is I could be right, but price could break up here. So then I short again up higher, and what happens? Price drops a little bit, and I feel like a genius, right? I'm like, okay, that was easy. And then it bounces up again higher. Then what happens? I short again. So I don't fight. After I take a trade, if I would have gotten in that trade and gotten right back out, I'm not going to just flip long immediately either. Because what a lot of people do is they'll be scalping and they'll short here and it doesn't work out. So then price breaks up, or it even just goes to here and they long. And they're like, oh, well, it didn't break down. I'm just going to long instead. Well, what happens? You're longing at a resistance right now. Okay. So yes, it might work out, but a lot of times after you get stopped out of one position, you were in that short for a reason, right? So I was in that short for a reason. And if price goes up and I long and I get dumped on, it's because I was shorting at resistance. Then I longed at resistance and got dumped on because price was at resistance. So right now, this is too sideways and choppy. There's not enough volatility, which it's afternoon here on a Friday. There's not usually that much volatility anyway, that much volume. The weekends get choppy. So for me, I don't even trade low time frames on the weekends. Personally, I would just back out, okay? I see that there's really no momentum, and if you're scalping, you want momentum, you want volume. So I would need to back out and look for my next trade. All right, and if Bitcoin's kind of choppy and sideways, I can look at another asset. I can look at an altcoin. All right, maybe Sol. Sol has been very active lately. There's been a lot of price action on this lately. So Sol is one of interest for me to be able to trade low time frames anyway. And basically what I would want to see here for a spot position is I would want to see my downtrend break here. All right, so we have a very clear downtrend. And then I'm going to look at my OBV. So how does OBV look? OBV has actually, which is on balance volume, it's actually broken the downtrend before price did. That's actually a good early sign here. All right, now I don't want to long at resistance. I don't need to, okay? So what I'm doing here is I would just set an alert. So I could set an alert at this trend line, add alert on trend line. If this trend line breaks, it's going to notify me, okay? I'm going to get a notification to my phone. Sol broke the trend line. Great. Now, if I get that notification, I can come back and look and see if Sol breaks up heavy. That's a nice strong breakout. I can look to buy a retrace, reasonable stop loss below, and my trade would probably look something. Again, this is just a quick rough estimate because price hasn't actually done anything, but my trade would look probably something like this. All right, so I have a 7 to 8% risk with a 25% reward. That is a 1 to 4-ish risk to reward, and I am very happy with that risk to reward. I can risk maybe 2% of my spot trading account, okay, on this. And if I get stopped out, I'm down 2%. If I don't get stopped out, I'm up 26% on this position, and I could get stopped out a couple times on a position such as this, on a trade such as this, and still be profitable, right? Because that's the whole goal, is to be profitable over time. We are going to lose some trades. We have to be aware of that. So this is a great setup here if it happens. But what a lot of people do is they get caught zooming in on low time frames and entering and FOMOing here. And I can't FOMO until the trade criteria has been met. So all the comments, oh, it could go up or down. Yeah, it's real. It could go up or down. Why guess right now when it's stuck between a lot of supports and resistances? Okay, look at all the support and resistance levels. It's got resistance here. It's got support here. It's got a lot of resistance from all this sideways price action. It's got a lot of support below. So it's literally just stuck in a chop zone. So rather than try to guess what's going to happen, I can have two scenarios in place. And I know that my first scenario is going to look something like this. All right, as we talked about. And my second scenario now could look something like this. So get rid of this. And we'll just say if we break down from here, something like so, okay, then maybe I would look for, around $100, and I could put my stop loss somewhere up here. So that gives me, again, a 6% risk to 23% reward, almost a 1 to 4 risk to reward trade again. Great risk to reward. I can, again, I don't know if I'd feel as confident about this because I have so much support below. So maybe I'd risk 1% or 1.5% of my account on this one, a little bit less. Because again, if it breaks out here, it's got a lot more free air to run. If it breaks down here, it's got so much support below it. And then what I can also do is I can manage my stop loss along the way. So if it does break out, that's great. But the market's been really choppy lately, right? We've seen a lot of breakouts lately. Just do this. All right. So for that reason, I may just go ahead, and if I'm in this long and it breaks out and it starts to go up, let's just say it's up, 5% or whatever. If it gets up here, at that point, I would maybe just go and tighten my stop loss to reduce my overall risk, just for the fact that the market has been hit or miss lately. Profits have not been hundreds of percents on spot positions like they were, back in December or January. So the fact that it's a little bit harder to get big gains right now means that I'm being tighter with my losses and with my risk management. I bought CRV at, here's exactly the trade I took, you guys, and I will share it with you here. So basically what happened is, and it was more of a weekly time frame, but I used the 6 hour for confirmation. And what I saw here was this big downtrend break and retest here. All right. And so I went to the daily and obviously saw this retest. I did not get in down here. I didn't catch the bottom or anything. So I entered here. My stop loss was down here, and my target was around 350 for my first main target. Okay. And you're going to see that this gives me about a 5% risk and a 58% reward. That is a 1 to 10 risk reward. I could lose like 7 trades, 8 trades, 9 trades, and win 1 trade at this, all the same position sizes, and still be profitable. Now, obviously, we didn't quite reach my target, but at this point, the daily looked great. So if you zoom out, the daily chart was a big old green candle. Looked amazing. And I said, okay, I'm not going to take any profit just yet. And then we started dropping. So we broke up. Nice strong 6-hour candle. Had a little doji. I hadn't taken any profit yet. And then we broke up here. And I was like feeling kind of euphoric. And I was like, I've had too many trades this year, 4th being one of them, that have been up 40% plus, and even just recently, that have been up 40% plus, and I've gotten greedy and haven't taken profit, and I've gotten stopped out at break even. So at this point, I went ahead and I moved my stop loss to break even to ensure that it was a risk-free trade no matter what, okay? But then I said, you know what, I'm going to take half profit off the table here. I'm not ever going to be mad about taking half profit, and it was up almost 50%. Took a little profit here. This ended up turning in, so I took half position profit. So right at that point, I'm like, okay, I feel pretty good now. I actually even moved my stop loss up into profit up here to at least lock in a little bit more profit, okay? Because that's how I like to manage my positions as a trader. Worst case, if I'm a trader, let's say I get stopped out on a wick and price starts to go back up, I can get back in, okay? I can get back in here with another good R to R. But I really like to manage my risk and be conscious of my risk at all times. So that whole position, I basically made about 40%-ish average by the time I closed out. So great trade. And what happened? We died. Did I feel a little FOMO here? Yeah, I did. I had closed out up here. We started to break up, and I remember people telling me, oh, you shouldn't have closed. It's going up. And I was like, yeah, it looks kind of good now. And then what happened? We just tanked anyway. And we went back to almost my original stop loss, but I would have been back underwater after being up 40%. So you need to know your own personal goals. You need to know what your target here is and what you're looking for. I got in, and it literally went straight up for like 2 days or 3 days or whatever it was. It was awesome. Okay. That's how I want to see a trade go. That's how anybody wants to see a trade go. Straight up. Hit your first target, easy peasy, stress-free. I got out. I didn't have to deal with any of this chop. That's how I trade. That's how I like my positions to go. That's not for everyone, and that's okay. But know what you're good at and just go to your strengths. If you always have a position, if you have positions all the time that go into profit, and then after they go into profit and you don't take any, and then you're getting stopped out, maybe start taking some profit on those positions, on those trades, on those time frames. And start learning which setups work best for you, which trades work best for you, and if you have confirmations. So one of the other things I want to talk about is setting limits or marketing in. If I'm on low time frames, I will market in and out. If I'm on high time frames, if I have a major support level and I know that price is in an uptrend or a downtrend, I will set some limits. Sometimes just setting limits at these major support levels can pay off. All right, if you see here on CRV, once it broke above this 99 SMA, a lot of times just setting some limits down here at these levels would have worked out very well. Okay, so that is definitely one strategy that I do find success with at times when the conditions are right. For me personally, I still like to actually just set alerts. So I would set an alert here, and if price reaches it, then I could go down to like the 1 hour chart and say, okay, yeah, that looks like it's a pretty good hold of support. I might mark it in here. Okay. If I do set limit orders, a lot of times it's smaller position limit orders, and my alerts will go off. I'll get a little bit of my limits filled, and then I can look to build some size onto that position if I think it still looks good. And what that does is sometimes you get these crazy wicks. So if I get these crazy wicks, at least I'm in on the orders, but I'm not fully exposed in case I catch it. In case I set my limits here and then it just dumps another 20 or 30%, because nobody wants to see their position immediately down 30%, right? Especially a full size one. As far as risk management goes, I pretty much keep my risk no more than 5% on my spot portfolio when the conditions are really hot. Lately, it's been 3% max, and honestly, I've even gotten down to like 2% max risk. Lately, with how choppy everything's been, it's just too easy to get chopped up in this price action. So 2% risk max right now is great for me. And as soon as my position's in profit, I'm starting to like move up my stop loss or shave a little bit of profits, just because I know how hard it is to trade in this. I know that a lot of people have been losing money in this crap, and I've had weeks where I've lost money in it too. So it's just way better for me just to mitigate my risk, keep taking in profits as much as I can, and paying the bills, obviously, right? Because that's what I am as a full-time trader, you guys. So I have to pay the bills somehow. So here's something I've been watching, you guys. This is IMNM. They had some positive news come out. TopGoonX has given a buy signal. So I'm obviously leaning a little bit bullish on here, and this chart doesn't have much history. And not only that, you see this really nice range breakout. And I like to do zones a lot of times. But you see here, there's a pretty important resistance level that we've just broken. And if I come down just a little bit, you're going to see we actually broke above it, flagged, and broke out again. So I really like to see a bullish breakout, consolidation, and continuation. So I did start entering a position on this breakout. I started building a small position. We dipped here, and we were still at support, and we're holding. So I didn't buy at the bottom of this. I did not add at the bottom because I wanted to make sure that we were going to close back above this support level. So, but I did add a little bit more here down in the 22 area. We've been bought back up nicely. So something like this, my trade's going to look something like this now. Okay, stop loss can be below that wick because I don't want to see price go below there. And I'm going to hope for immediate continuation to at least somewhere up in this high congestion area, right? So somewhere up here is going to be my first target. And I do like setting zones sometimes because let's just say, you guys, I set my target here, all right, right at this level, and that's all I'm waiting for. And price does this, right? And I'm just waiting here and I don't get filled and it goes back down. So that's why I like to do zones sometimes. So I can just say, all right, this is a whole major resistance level. So if price gets into here, I know that I'm at resistance and I might look to get out a little early if we stall or if I see major signs of rejection. That's what I did with CRV. That's why I got out a little bit early on that trade and it ended up being a good call. I wasn't stuck to my bias. I ended up making a nice profit on that trade. I don't keep a journal per se, but I do a lot of times like to share some experiences on Twitter or share, if I'm annoyed at something or whatever. Or maybe just if there's something going on in my trading, like some risk management tactic I'm using, or I'm trying to remind myself of some risk management or emotional management need, I'll share it on Twitter. That helps me verbalize it and hold true to it, and also helps you guys hopefully to share some, some wisdom, if you want to call it that, and maybe some tips that will help you guys that aren't as, disciplined. Of course, I try to be as disciplined as I can, but we all have moments of weakness. So there's still times where I'll FOMO into a trade, immediately be wrong, zoom out and see that I just shorted at support, which is a no-no, rookie mistake, right? Now, if you guys caught my small video on Trading Trench earlier in the series, or earlier this month, I should say, you do know that OBV is one of my most favorite tools to use. So I will use it to long and short, or for confirmation of strength. And you can see here that even though Bitcoin has been pushing up, OBV has still been pushing down. So that was a very good sign to maybe not be so bullish yet. All right, OBV was still showing weakness. And now we have to be cautious because, again, yes, we're kind of at support here, but OBV is now showing more weakness. It's losing this trend. It retested it cleanly. So if we make a new low here on OBV, it's very likely that price is going to follow and make a new local low. So OBV, if you did not catch my Trading Trench video, make sure you check it out on YouTube. I explained it a little bit more in depth in the quick video. But OBV is definitely by far my favorite tool to use for trading because it catches early breakouts and breakdowns and is good for bullish divergences. So you can see here at the bottom of Bitcoin, price had gone lower, but OBV, on balance volume, had actually made a higher low, showing a nice bullish divergence here for a bounce. All right, you guys, that is about all I have for you today. Before I go, though, I do want to share the biggest lesson that I've learned from trading, and that is to always expect to be wrong. All right, anytime I enter a trade, anytime I'm in a scalp, I'm always looking for reasons why I'm wrong, why this trade won't work out, and then I'm ready if it doesn't work out. Because there's nothing worse than entering a trade, not having a stop loss, and watching that trade keep going against you. And you're like, oh, you're just finding ways to validate that trade and why you were right. And you just completely miss something. So the biggest tip I can say is just expect to be wrong. Trust your setups and manage your risk because you will be wrong. It's impossible to have a 100% hit rate. So as long as you're managing your risk, if you take a couple losses, you're not ending your trading career. Hope you guys found that video useful. If you did, please hit the thumbs up, subscribe to my channel. I really appreciate you all, and I hope you're excited for my next video. I'm gonna have Big Cheds on as my guest. He is an amazing mind, and I'm really excited for us to all be able to learn from him. So stay tuned for next month's episode, and I will catch you later.